them. Vikash Kumar Jain, India strategist and head of India Research, CLSA, is now joining in. Vikash, thank you very much for joining in. You believe that the reduced relative premium to peer markets after India's record underperformance in 2025 should improve the acceptance of India. So lay out for us, how do you see 2026 to play out and what your big bets and themes would be?
Hi, Rima. Thanks for having me. So 2026 is a little different from 2025 because we have this, I would say, divergent forces for India. Firstly, the relative valuation has become more palatable. And what that has done is maybe foreigners can start looking at India. But at the same point of time, despite record underperformance of the market last year, we find the market actually slightly higher on PE than where it was at the start of 2025. So from that perspective, absolute valuations do not leave a lot of room for re-rating. So the way we think about it is if during the year, due to global fears on consolidation in the AI space, on the AI global bull market, or fears of a yen carry trade, leading to some kind of a need for defensiveness, that's where India becomes an acceptable portfolio hedge globally. Within our domestic setup itself, I think 2025 saw a lot of large policy announcements in the form of income tax cut, in the form of GST cut, in the form of even several rate cuts. 2026 from that perspective will be less about announcements because I think a large part of the fiscal and monetary room for the government is gone. I think they will continue on fiscal consolidation. So they would want to wait and see what these measures finally, what is the impact of that and whether that they wait for the growth push that these measures would provide. And therefore, less of a top-down noise other than, of course, the trade deal thing, which I think is an early 2026 event, perhaps a trade deal with the US as well as EU. Beyond that, I think there will be a little bit of a lull in terms of announcements, and then the wait of when the announcements of last year pushes up growth in 2026. So broadly, with that, not expecting any fireworks, relatively muted performance is likely in 2026. But the focus would be in areas where lower for longer rates, a big push towards consumption. So consumption and rate sensitives, along with, trying to play the headlines on trade deal, basically India's relationship with the US eventually improving. All of that should help certain sectors. And that's where we have our favored overweights, our consumption, real estate, and IT.
Real estate, consumption, and IT are the three areas where you think you want to be constructive on. Vikash, hi, morning, and I wish you a good 2026 for you personally, and of course, for markets as well. Within these three, in terms of what you've published out there, which are the top 2 or 3 ideas in each of these 3 sectors? Talk about what you've already published, so it's out there.
So I think, you possibly, you guys have our reports, and we did make a few changes to we doubled down on consumption. We added a few retail names to our portfolio because we believe that after the recent, our relative sideways movement, risk reward had improved in some of those retail names and commerce names. So those are some of the names that we recently added. Clearly focused on consumption, overweight on staples slightly, overweight on autos very clearly, overweight on discretionary. So, and real estate is the other other sector that we like.
Okay, all right. Hi, Vikas. Good to see you again, Vikash. So in terms of moderate returns for this year, you think on the Nifty we should get high single-digit returns?
Yeah, I think that should be the best case. I think the setup that we have is perhaps we continue with the global bull market. And in that setup, there is no real requirement for us to, maybe the chances of a sharper correction in India goes away. So we are in this gradual derating period where multiple keeps coming down, and that's where returns will be perhaps lagging earnings growth. And that's where the gradual derating kind of plays out.
Okay, all right.
High single digit could be a good case.
All right, so that's on the Nifty. The other, big factor, and I think the voices that I hear are actually split with regard to crude. What's going to happen to crude oil from here on? Because we're talking about US going in there, ramping up production in the Venezuela. It'll take a few years, obviously. But then there's a geopolitical risk as well. So from around the $60 per barrel mark, what are you all working with in terms of the movement of crude oil prices? End the year closer to around 70 or dips towards 50?
So it's the former. So we believe that, see, on the face of it, if you were to look at just simple like Excel numbers, crude oil market looks oversupplied. That oversupply, if I were to look at what demand and supply numbers are being talked about, is in the range of about somewhere around 400 to 500,000 barrels a day or so. So looking at that, I think any kind of geopolitics, political risk, I mean, say some kind of stringent action for people buying oil from Russia and some of those other things can easily take away that kind of a supply and make the market, balanced. Since an oversupplied market is the nervousness that is baked into the stock price, a more balanced market, which could happen due to these geopolitical risks, either in Iran or in Russia, could easily allow crude prices to recover. So we are more in the range of that 70 plus as the year passes. So a recovery in from the lows of the start of the year is how we think of crude prices.
So just to close the loop on that, Vikash, you'll be more moving now towards, I think, Oil India and Reliance Industries rather than the OMCs. You'll play it as a tactical bet earlier, right?
That's right. So we like the upstream more. Upstream stocks more than the downstream ones.
Got it.
Got that. Vikash, we'll leave it there. Thank you very much for joining us. Good speaking with you, and appreciate your time here on CNBC-TV18. So that is the conversation with CLSA's Vikash Jain.